What's up, guys? It's Brandon Karen here, and today I want to encourage you guys and really talk about notes and promissory notes because it's a great tool to be used, especially in the creative financing space. It is something that we have clients using. We have basically lenders and borrowers, people on both sides that are using right now to do deals creatively. And it's a great tool. A lot of financial institutions will tell you not to do something like this because it does only protect the lender, right? The person that's lending the money, not the borrower, because the borrower is the only one that signs it. Now, this is not legal advice, but I'm just telling you guys how we use it and to really think about it as a tool because it's a great tool right now that you should be using in order to do your deals creatively, right? Because sometimes you run into situations like I ran into. There was a situation where we had this client and they're looking at this property, beautiful property. I mean, it's got beautiful mountain views. It's on 68 acres. It's got plenty of buildings on it, 2 springs. I mean, it is just awesome, right? You're in the foothills of the mountains. It's a very beautiful property. So much you can do on it. Now, on this property specifically, there are 2 owners, right? And the property is, let's just call it $2 million. It's worth $2 million and they want to sell it for $2 million. So our clients are thinking about purchasing this property. Now, they think like they got to raise the money cash and they got to figure out a way to get the money and get the down payment. But one of the solutions that we had to this scenario is essentially if you were to buy out one of the owners, because in this situation, like we had one owner that really wanted the money, the second owner didn't really care as much. So what we were actually thinking is utilizing a promissory note. And the way that we would do that is essentially we would get a loan for 50% of the purchase price, buy the property outright for, 50%, which is $1 million. And then, our clients only need to raise about 200, 250, maybe 300 instead of, 600. So they would raise the money, buy the property for $1 million. Then what would happen is the second owner would do a promissory note. So our clients would sign a promissory note to that second seller, and you could even get it recorded on the property as well. But that allows them to really creative finance the deal, and then that second owner then gets essentially monthly drips of income rather than just getting the lump sum all at once. So again, it's a really good way to finance deals, to really help you do deals creatively, especially when you run into a situation where you have more than one owner. So first of all, what is a promissory note? I'm not just reading from an article here and a definition, but like a loan agreement, a promissory note is not a legally binding. It is issued by the lender to the borrower and outlines the repayment terms the borrower must meet over the course of the loan. It's usually shorter and less formal than a loan agreement. It only outlines the repayment terms and ignores specific contractual terms. You'll likely issue a promissory note to a borrower if you lend money to a family member or investor for real estate purposes. So this is exactly what I'm talking about. This is using a promissory note and saying like, hey, you owe me this money and these are what the payment terms look like. Now, the cool thing about promissory notes is that you could design it the way you want to. You could design it like, hey, if I want to lend this money short term, then you could design it short term. Maybe in this case, right, when we're going back to us owing this guy $1 million, he could say, you know what, I'm fine taking payments. I'll take maybe $5,000 a month in payments. But in 5 years, you got 5 years to balloon me out. So again, the promissory note and the terms of the agreement could kind of specify these things. It is, again, a really good tool, but it allows you to do some creative financing. It's a very important tool with creative financing. It is a lot different than a loan document, though. So remember, loans are much different than a promissory note. Promissory note really just holds the borrower accountable rather than the lender. And a loan rather just holds both parties accountable to those things, because on a promissory note, only the borrower will sign it, not the lender. So remember that. The main difference is that, because the lender doesn't sign it, there is no really agreement for them to necessarily follow through on, right? And they've recorded a second deed of trust on your house or on the property that you're purchasing. So they have equitable ownership rights. They have rights to that property as well until you get them to release it, which then you would have to get a release of lien once you pay it off. So make sure that, when you're negotiating these things, you speak to an attorney, you talk to an advisor like us to help you creatively finance these things and creatively structure it, because it's so important, especially when you're doing creative financing, to not get in trouble. It's all about how can I protect myself in the future. And I see a lot of people getting in trouble and they're not structuring their deals properly. And that's where it starts, is structure your deal properly. Make sure people have agreements. It doesn't matter what someone said they're going to do. Is it in writing? That's my first question, is it in writing? So make sure that you put it in writing, put everything in there. Think about the what ifs, because it does happen. Like, for instance, what if this person passes away and there's still a promissory note? What does that look like? Do you still have the 5 years? Or could the heirs come in and say, you know what? No, I don't care. We're not protected by it. We own this, 50% of it. We want our money right now. And you're like, I'm only a year in. I don't have the money, right? So make sure you structure it. You put in the agreement what you want it to look like, and think about all the what ifs. So it's really important to think about the what ifs. I would even read loan documents, your loan agreement, that's similar, and then kind of structure it similarly, because you could do it that way, right? This is creative financing. You guys can structure it the way you want to. Again, utilize a promissory note. It's a great way to do creative financing, especially not involving the banks. Definitely talk to your tax accountant and an attorney if you need to see what the tax implications and the attorney structure fee would look like. So thank you guys for watching. I hope you guys learned a little bit more about promissory notes. This is still new to me. I'm still navigating it, but hit that subscribe button below, like, follow, comment, and I'll see you on the next one. Take care.